Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, the 10th of January, 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The risk is off today. Looks like markets allocating to the yen topmost. The yen is up almost 1% at 88 pips. Crude oil follows. February crude trading at 63.50, currently up 53 cents. Got as high as 63.67 overnight on WTI crude. Gold is next, trading at 1,321, up $7.30. So those, and of course the euro follows. Everything else is red. We saw a drop in the main in Bitcoin yesterday. We saw, and that's still lagging. We're seeing a hit of about 1% in the DAX, and the U.S. Treasury remarkably is down as well. The bonds are down 30 ticks, along with the equity indices. The S&P 500 is currently down 9. It has been down as far as 27.37 and a quarter. Currently trading 27.43.5. So overall, the market is allocating to safety this morning. Not really sure why. Not sure it even matters. We just see that it topped out and they were selling into the afternoon yesterday, and the market just continued lower. New all-time high at 27.60, put in before the drop. We'll go over the details. We'll go over the details in a minute. As far as what we've got that may impact us this morning, at 10 a.m. Eastern, we got wholesale inventories. That's a top tier number. For November, expecting 0.7, prior 0.7. That's at 10 Eastern. At 10:30, we get crude oil inventories. Crude is expecting a draw of 3.75 million barrels. Distillate inventories expected a surplus 2.25 million, and gasoline expecting a surplus of 3.25 million for last week. And then we have a parade of Fed speakers. Fed's Evans at 9, Kaplan at 9:10, Kaplan again at 10:15, and Bullard at 1:30. Not really paying attention to what these guys are saying. They seem to be almost like a choir. The conductor says what they should say and what their tune should be, and they just all follow along. So they haven't had an impact just yet. I think they will at some point, but currently not important. As far as what we expected yesterday, so I spent a lot of time yesterday going over the prior days, basically digestion of the primary scenario on the Trader Byte, and then seeing how that executed. There's actually a video that I created that I never showed. Hang on a second. Let me see if I can pull it up. It's about a 2-minute video, and I forgot to show it yesterday. I don't know if it's even relevant today anymore. Do you guys want to see it? Let's see. So, the video. Here it is. If you don't want to see it, you can. It'll be fairly quick. Here you go. This is what I was going to put out. This is a recording live during the trade that I showed you yesterday. I showed you it on Bookmap, but this is the live recording. Remember, the scenario was a push down to 27.37 area, looking for support around there, aiming for 43.75, 43.25, extended target at 47.75. So I've sped this 10 times. And you can see that right there I put the position on. Right there, the blue triangle position is on. That is the theoretical average. This is the theoretical average currently. And this is how the market's responding. So I looked for that failure to push. And of course, hours and hours and hours later, well, 70 minutes later, I just couldn't let the video keep running and running. I show that finally I got a scale out right here. Okay, you could see how much heat was taken. There was really virtually no heat at all. We started here, and then we got to scale out the initial risk scale out. It drops our theoretical average down to 2737.88, and then the market finally starts moving towards that week high, which I got a little bit greedy with. It's a 43.25, and I decided to go a couple ticks above that, figuring that I'll be in early. My order on the offer went in with my fill. I actually went in before my fill by a couple of seconds. I figure I'm queued pretty well. It actually tells me where I'm queued. I'm in the back of the line a little bit here, but I'm looking for that to get filled, to break through, to burst through, given the energy that we had coming in. So there it is. It's just sitting, and we're watching the heat map develop here. Again, this is running at 10 times speed. We have about, what do we have? About 60 seconds left on this video. And so all you do is just sit and wait. So we started this trade at about 9:13 Chicago time. And here we are at 10:45. I decided to move my offer down because it kept banging away at that high. You see that right there? And it just kept failing to push. So I moved my offer down, and I finally got filled right there. It took forever to get filled at 42.50. Moves my theoretical average down, as I point out there. My theoretical average down is 27.30 to 27.36 and a quarter. And now it's just whatever it does, it does. I've basically banged. I've basically banked the meat of the position. And in yesterday's video, I showed you where it ended up. I ended up having to intervene at about 1 o'clock or so to close out the position around 27.47.50. Okay, so yesterday's play was a pretty high probability. A pretty high probability push to 46.50, looking for a base, and then looking for it to continue higher. 55, given a 43 low, 55 was expected to be the high for a 12-point range. That was the key plan. This is what we got, and it was messy, at least for me. Here we put in an opening swing, takes forever. Finally get a low into 27.48. We push through the prior high, which is this green line. This is the green line, the prior high. We push through by 2 ticks. Then we bounce up to mid, which is just what I like. Bounce up to mid. No, we know that it's an open auction out of range, so the mid trade is a little more risky. And then it goes right to the mid, to the tick, and then we get this local double bottom right here and here. This gives us a good chance statistically that we're likely to push through. The market just needs to hold below that high, and it ends up pushing to the top. So right there we get a little squeeze, and I'm a part of that, unfortunately. And so we get a double top. You get a double top. This is a legit double top, 15 minutes apart. So now we're playing the double IB high probability. This is not quite a double IB low probability yet because the distance between these lows is too tight. And we get a double IB high, so we expect an 82% probability that this would break by the end of the session. The market breaks it by 1 tick, and we get a 1 tick failed auction. It pushes through the 53.50 to 53.75, and it immediately finds sellers that take us down and give us a legit double bottom, right? So this is a double bottom that's 15 minutes apart, triple bottom locally. And so now I'm just hammering away at this thing looking for the 4650. And in the 4650, the IB is in at this point. This is the IB is definitely in at this point. So I'm looking to push this, but this is a correct point here about the IB high. It's not quite in yet. It could shift, but by the time this had formed, the IB was complete, and that's why it's stuck around with that one tick failed auction. So that's a legitimate one tick failed auction. We probe above the IB by one tick and burst down. This stacks all the probabilities towards the short side. We finally get an IB low, double IB low with a one tick failed high. This is classically, legitimately an exhaustion on the buy side. Buyers are unable to push through. Generally, that's what it looks like. So I'm pushing and looking for that 4650. I'm expecting the market to push through 4650 down to 43 base, and then start working its way up to 55 per scenario one, right? Not so. We got this rip up 9 points. That's a 3 standard deviation move on the rotations. It just tells me that I'm clearly and completely off the next opportunity. Doesn't show up till right here, and it's only worth a couple points, and then from there it's just constant chop into the close. We end up with a double distribution profile. Double distribution profile with a 2754.50 as the cutoff, and now that is an important resistance area above. The market opens up a little bit lower. It opens up a little bit lower in the overnight session, and it puts in an overnight high below the close, 2752. A relatively strong bearish signal there. And then the market just continues to push down and has moved all the way down to 27.37 1/4. And so it's pushed through the 43 and so on. So that's what we have as far as what played out yesterday. So yesterday, if you look at the 15-minute, it's what I like to call fugly. You look at this 15 minutes, just crossing and crossing and crossing and crossing. Not my favorite. But there's usually I can do something with that. Usually there's some follow through. But yesterday, I definitely happened to step in at the wrong time, and so we see a loss. And that's just how the game goes. You lose some, you win more, hopefully. So that's where we were yesterday. This is what we have this morning. There was some legitimate, really legitimate selling coming into the session today. The Asian session opened weaker, but holding steady. 100% of the overnight inventory is short. And then as we approach the European Open, right in here, we just have sellers. Okay, and overall the market has sold on pretty good volume. So we've got 271,000 contracts. 271. That's a number that's hidden behind here. 271,000 contracts that have traded. There's the volume. Oh, it's also obscured here. 271,000 right there behind the green line. That's about a little more than twice the expected volume. It's not rollover, so that's not the reason. This is market action, volume coming in on the sell side. This is pretty legitimate selling into the overnight session. Now we've seen this many times before, where we come in lower and then we immediately start looking like we're buying the dip. we start to push higher. And so this is what things are shaping up to be. As far as what we're expecting for today, the overnight low is right on the low of Monday. This morning, I'm expecting an open auction. I'm expecting a continuation in the selling. I'm expecting it to lean up against. So we're below the mid of the overnight session. I'm expecting it to lean up against the overnight point of control, consolidate. I'm looking for an impulse back into the prior day's range, and I'm looking for a target of 27.54 from 27.40 for today. So I'm looking for a battle at yesterday's low and consolidation against what happened here in yesterday's morning session, and then for it to grind up. That's the primary idea. Given that we have traded back on top of ourselves, I'm going to go ahead and put in a profile that starts with the last big gap. Okay, big open gap. That's the way our profile looks. It's pretty sparse. It's very, very pokey. Some strong volume areas throughout this profile, and this actually creates some pretty clear risk reward setups, with the high volume nodes being targets, the low volume nodes guiding us. If we break through a low volume node, we look for the high volume node target above there. We look to test the other low volume node, and so on. This is stuff that I cover in webinar 2. So once we break through a low volume node, once we come up and through a low volume node, we expect the high volume node after that. We expect it to consolidate. It still has strength to the buy side. We expect it to push to the next low volume node, which would be right here at the 48 half or so, 48.75. We expect it to test there. I expect the market to struggle there, and then overall, if it does make it through, then I'm looking for 52.50. This is where this, as I zoom back out here to where we were, this is why I expect it to struggle there and struggle here. So that's the primary trade idea for the day. Otherwise, we would likely get an open test up, consolidate, drive down, impulse down, consolidate into the overnight point of control, pull back, continue lower, and look for a break of the overnight low. The next target down is likely to be 27.34. The next key support areas, as we saw from the profile. So if we look at the profile, the next key support area is right here. Okay, so if we hold and get below this price, we're likely to get down into the 27.34, and then from 27.34, 27.26 or so is the next key area. So a lot could happen today. It's a pretty confusing setup, but that's setup number 2. Now I have 3 and 4 also that have a pretty good probability historically for today, but I won't cover those because my time is up. I want to remind you that tomorrow I am doing a webinar for Futures IO talking about accountability, very important topic for traders. So please sign up or register so you can get a copy of the recording, even if you're not going to attend. And I'll leave you with that for today. Hopefully you're picking something up from this Trader Bite on a daily basis. Take care.